So I wanted to call this presentation Defiant versus the Compliant. But then I was told not to talk about that topic. And I'm going to try and keep you awake and keep you excited in this dark room and keep you entertained. And what I'm going to talk to you about is what we've been working on is a protocol called inflation, Truflation. And what we've been doing is trying to aggregate prices in the real world and bring that to the blockchain and then calculate one of the most important metrics out there, which is inflation. We today, I mean, you can read the numbers here, so I'm not going to talk about it too much, but we have now about 80 different sources. We track about 20 million items, and we have 3 price feeds per item to ensure accuracy, reliability associated with the price feeds that we bring to the blockchain. Why did I do this? Why did I get launched into this? I was formerly the CEO of Bitcoin.com, and we launched that. We got that to 20 million wallets. We had 500,000 merchants accepting Bitcoin as payments. And then the government told us, shut the economies down, and told us that inflation is transitory. So you've just shut my business down, printed trillions of dollars, and told us that inflation is only transitory. And I didn't believe that, so a team of us got together and built a protocol that would track what is true inflation or truflation. And as you can see, inflation was not transitory. If you were in the UK, you lost 40% of your purchasing power in the last 3 years. 40. In the US, it's nearly 30%. So you're losing a lot of money if you keep it in fiat. A lot of us don't live in the fiat world, we live in the crypto world. You know, most of us have anywhere up to 99% of our assets all in crypto. And so that doesn't matter that much. But for us, it was an important metric, and we felt that we needed to track that. And so we did that, and we continue to do that. And what I couldn't believe is our first customer base came from Wall Street, from hedge funds, from TradFi. Why? Because they all have their assets in fiat, and they used our numbers to track the performance of the government. And so they were using us to predict where the markets were going. And so we started going further down that path in prediction. Where and what influences the cost of living? And what influences the cost of living is the price of commodities, the price of real estate, the price of human capital, of people, salaries, wages, supply chain. And so we started aggregating more and more data. And that led us to becoming an oracle for real-world assets. And we're seeing this grow in DeFi, in crypto. So we heard about options today, we heard about salaries being paid, you know, everybody's more and more, you're seeing that grow. But ultimately, how can we now participate in this ecosystem? 1.7 billion people on the planet do not have access to all of the trading and financial services that a lot of the people on stage were talking about. How do we make that available to all of these people? And so we see that happen, and it's not going to happen if we stay compliant. Because you're going to need a committee to approve a committee, to wait for a regulation, to then lobbyists who are going to work with regulators and politicians to pass a new regulation, etc., which is going to take years. And I think all of us on this planet want to actually see it in our lifetime come to fruition. And let's remember, Bitcoin, when it started, was 10,000 Bitcoin a pizza. Today, we've managed to grow this industry to $2.3 trillion. Not only that, we've managed to actually generate, in 12 months, $1.3 trillion in DEX trading, so on-chain trading. And this is becoming a threat to the traditional world. And I think that's what we're going to see grow even more. You're going to see more synthetic assets and innovation roll out faster in its synthetic form. And we've already seen that with synthetic Ethereum, with synthetic dollars. with synthetic real estate, with, and synthetic commodities. You're seeing gold being tokenized, not just in the form of actually having physical assets, but in the form of synthetic carbon, in synthetic uranium, which is just taking the price of uranium and then building a synthetic token associated with that. And we're going to see more and more of that. And we are going to help drive and grow that. And we've started doing that, leveraging our core competency. What is our core competency? It's building and calculating indexes and putting those on-chain and allowing on-chain participants to help compute and govern those indexes. So there is no one bad actor that can change, that can change and manipulate these indexes. Because a lot of people bet a lot of money. The biggest index in the fiat world is tracking $65 trillion worth. That's one single index. The index, the synthetic index on-chain, will be greater than $1 trillion by the end of this decade. And I'm just looking at one single index in the fiat world and taking that as a benchmark. And so this industry will grow significantly. Where are they going to get their price feeds from? Who's going to help them with calculating that? And then who's going to ensure accuracy and governance associated with that calculations? And that is what we're trying to do. And you're seeing that also in the form of synthetic ETFs coming to market. BlackRock just announced one, but it's only permissioned. You have to be a $100,000, accredited investor. So only certain, again, limited people can participate in that. How do we open this up? And we can do this today, and we'll be bringing these types of products to market with selected partners that are helping and trying to grow the DeFi ecosystem. Now, we all heard of synthetic dollars. This is the Stable Summit. Why is this guy coming here and talking about an oracle and Truflation and inflation? Because inflation means stability in my wealth. How can I hold my wealth and keep that? And I need to keep that in a form that I can also use. And so we're really keen and excited. We launched Nuon at Stable Summit last year in Paris. And today we're announcing our sort of V2, where we're improving on that. We've taken all the learnings from the first launch and taking that into the second launch. Why? Because we need flat coins. What is a flat coin? A flat coin is a stable coin that is pegged to inflation. So you're protected against inflation. The Big Mac will cost a Big Mac today in one Nuon, and it will be in one Nuon again in 3 years' time. No matter how much it is in fiat, it has been rebased, and you can then purchase it at that same price. But in order to do so, we've identified some flaws in version 1. It needs to be yield-bearing, and people need to expect that. And how and where does that yield come from? If you cannot explain easily and quickly where the yield is coming from, the user feels the yield is coming from them. I am the source of the yield that's being generated from that coin or from that asset or from that investment or from that utility. And so what we have to do is very clearly identify how that's coming. It has to be secure. I have to be able to deposit, mint, redeem, or even sell instantaneously without any issues, problems, delays. And then how do we earn additional reward? We all are not happy with just covering inflation, because we all know that inflation is just consumer price index. It's the cost of a Big Mac. It's the cost of the trip to get to Brussels. But in order to generate wealth, I need to cover asset price inflation. And asset price inflation is the house of property, is about generating wealth. How do we do that? We need to beat the benchmark that is provided to us by consumer price index. And today, if you think about it, we're running at about a CPI of 1.8% according to Truflation, and asset price inflation, though, is up in the 12, 13, 14%. So we need to be growing our wealth by that amount at least. We're lucky. We're in an emerging industry that is generating, in good years, way above and beyond that amount. And so we all wait and hodl through the dark years to cover and hope that the good years make up for that. But those are things that we're looking at. And why, again, do we need this? In crypto land, all of you have stable coins. And all of you hold on to stable coins. But those stable coins are being depreciated. And if you look here, most of the stable coins, 99% of stable coins are in US dollars. The US dollar has been going through 24% aggregate loss in value in the last 3.5 years. How many people are in a DAO, working at a DAO here? How many people are managing treasury? How many are wealth managers? And if you're a wealth manager and not taking care of this, and you've got your assets in crypto, in stable coins, a lot of treasuries we talk to have up to 1 year's worth of OPEX in stablecoins. And those stablecoins are depreciating over 3.5 years by 25%. That's a lot of money that you're losing and a lot of purchasing power. So how do you deal with that? And so we built Nuon, and this was the reason why we addressed this market. How does it work? We use, obviously, Truflation as the source of truth. And what we do is we ensure every single Nuon holder is protected by inflation. How are they protected by that? Basically through a rebasing technology, and I'll come to you how we're generating the yield. But minters, so people that help generate and create more Nuons, are rewarded with NuMint, which is the governance token. And the way and how we source these yields are it's coming from, basic risk, medium or low risk yield assets or yield pools or liquidity pools that we're going to be using and deploying the funds in there. Your Nuon will always allow you to redeem your US dollar. So you can redeem your US dollar one-to-one anytime. And we have 3 mechanisms that secure that. You have a treasury buffer, which is basically your warm, hot storage that you can go back and redeem your money through. We have a backstop. What is a backstop? A backstop is in the event inflation is higher than the yields you're generating. How do you cover for that? The backstop has a pool of funds that are in inflation-ready assets, tokenized oil, tokenized real estate, tokenized gold, tokenized maybe even Bitcoin, as a compliant tokenized S&P 500. All the assets where people put their funds when inflation is high. And then ultimately, the last sort of, that's my bell, or is that the bell, church bell outside? Yeah, anyway, so the last level is the governance holders ensure the holders there for that. So that's one other thing. What do the governance holders do? They participate in ensuring all of those benchmarks that are needed out there, from the mint cap to the treasury buffer, vault weights, veto rights to specific vaults, and how much of the funds and the yield go to the backstop. And so that's really Nuon. That's how it's worked. You can go to the website, read the white paper, check it out over there. And we've built all of this because we think this is the choice of the new generation, and we need to continue to build on DeFi and motivate people and excite people that this is the most exciting time to be alive, and this is the best place to be working in crypto. So thank you, and the bells have told me to go, so I'm going to leave you all. Thank you very much.